maybe creating separate contracts in those scenarios. Annuities that have LTC benefits, these doublers, you could probably still do a joint contract and get away with some decent income. That's important to consider when you're looking for the highest income for yourself. Hey there, I'm John Stevenson. Welcome to the show. Today we're going to be talking about someone that I'm helping right now with an annuity, and it is $450,000 for joint lifetime income. He is 64, his wife is 66, and they are going to put it into Corebridge. Their base is going to grow by 8.5% simple interest every year, multiplied by 6.95 equals $34,000 annual income for life. And then if they need LTC, like long-term care, they're going to be able to double that for $68,000 per year for up to 5 years, or until the account value is zero. That's one thing you have to think about with these annuities that have LTC benefits, these doublers. They are only good for as long as the account value is there, and then they're gone. So it's good for the early years, but later when you're in your late 70s, 80s, they're not there anymore. So you got to buy a separate LTC policy for that. But it's a nice benefit, and most of them don't even charge you for it. So it's nice to have it just in case you need it. But I wanted to talk about this because they are going to get a decent amount of income, and it's going to be with a withdrawal rate of 6.95%. So much higher than what you would get, if you're going to take 3 or 4% out as a safe withdrawal rate. And it's joint. So that's important as well, especially if you're married. Even if there's an age difference, I would say 5 to 10 years, you could probably still do a joint contract and get away with some decent income. Anything beyond that, maybe creating separate contracts in those scenarios if there's that big of an age difference. I say that because I meet with a lot of people who have spouses that sometimes are 10, 15 years or more younger. So that's important to consider when you're looking for the highest income for yourself. Sometimes it makes sense to do a single payout versus maybe doing a joint for that. So let me show you around. You see here is Lake Tahoe. You see the beach down there? I just had a guy walk past me with his dog. Can't beat that, huh? Look at those rocks. Yeah, you should have seen it just a couple hours ago. It was glass. Anyways, I just kind of come through here, hike through the woods, and tell you stories about people I'm helping. And these are real stories, real people, real scenarios where people are looking for real guarantees. They want lifetime income, and they're looking for someone who's transparent and who's willing to show them what's available. Transparency is very, very key when you're looking for an advisor, because you want to know that they're going to show you everything, not just a few things, those few things that make them highest commissions and maybe pay you the least amount, which often is the case. Unfortunately, there are a lot of people that do that. But I tell people, go to my website, go to johnstevenson.com, look at my calculators, find out for yourself. Okay, you don't take my word for it. Go plug the numbers in for yourself, whether it be a single or a joint payout, and find out if that income is going to be suitable for you. And if it is, book a call with me. There's a link below this video, goes directly to my calendar. So happy to help and answer your questions. And if you got questions you just want to ask and you don't want to get on a call, then just comment below. I'm happy to answer those there as well. But if you do like the video, make sure you like, subscribe, share, make any comments, of course, if you have any. And I really do. I hope you enjoy this channel. I hope you enjoy the videos that I put out. I enjoy doing them. They are meant to answer questions and to help people kind of understand how these annuity contracts work. They can be a little bit difficult to understand, but if you have someone explain it to you, it's just industry jargon. A lot of times we will talk it and people don't understand what we're talking about. Keep in mind, when you buy an annuity, you're buying the contract. You're buying a contractual agreement, okay? And if you're buying a pension, then that's what you're buying, okay? Forget about all the fluff on the indexes and the participation rates and the cap rates and how they get there. Sometimes people get hung up on, well, this one pays 9%. where this one only pays 7%. Why would I buy the 7% one? Well, it's because the withdrawal rate's way higher on that one versus the other one. They're just using the high rate of growth for the benefit value to sell you into something. So you have to look at both. And I mentioned that in several of my videos. You have to look at both the income benefit value and the withdrawal rate. They're both very, very important. Anyways, all right, enjoy the view one last time. Come up to Tahoe if you want to enjoy it longer. It's a beautiful place. All right, thanks a lot. We'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question.
and I'm looking forward to hearing from you.